goes back to the taxpayer who is paying these loans, and bringing me to the next, of course, topic of discussion on loans that we're not even able to access thanks to the interest rates that are witnessed right here. And of course, talking about what we witnessed yesterday as members of parliament turned a deaf ear to the proposed repeal of interest rate caps on commercial bank lending. Seems like, the members of parliament are in support of protecting us. Is it a genuine move? Of course, looking at the fact that banks had worked in cohorts with Treasury and also the CBK towards seeing to it that there's that, of course, review of the interest rate of the caps.
Well, the objectives of the interest rates cap when it first happened was actually to protect the consumer.
Oh, really?
From high and exorbitant interest rates. But one of the objectives that was not foreseen and which has been achieved is that now there is, the small borrowers, the private sector has been crowded out of the credit market. And you can easily see that capital is not easily available to small business owners, individuals, micro and small enterprise sector.
Right.
Who actually contribute to about 65% of the economic activity in the country, and which accounts again over 70% of the employment opportunities in this country. So that was counterproductive, and I think it was not anticipated.
Right.
And I think that's why you can see a change of heart in the CBK's monetary policy and even the Treasury. But I think perhaps in seeking to protect the Kenyan, financial consumer, perhaps this policy may end up hurting them more.
Right.
And I think it's time this policy was reconsidered. Yeah, because banks are now looking up to the government to borrow.
Right.
Because borrowing will go on. It's either the individuals to borrow or the government. But now borrowing is dominated on the domestic scene by the government, because government is low risk, while individuals and the private sector, and therefore we may see slowed economic activity because of dry spell in terms of availability of credit.
Also for the SMEs, of course, who were largely would want to be protected. And of course, upon the reading of the budget, there was that clause that said that, it's now time that we also protect the interest of the SMEs at some point in time, which is something that we've not witnessed. Because again, the very same government the other day argued that it's bound to top up to, of course, the local borrowing aspect of it. Then that means they will make it even harder for the SMEs, for the private bodies or entities or the common mwananchi to go out there and access some of these loans. So when you see banks joining forces with the CBK and Treasury, in a resurgent push of a lift of interest rate, where then does it place? And of course, the common mwananchi or maybe the private borrower. And this move by members of parliament that, of course, sort of seeks to thrash that. Is it really a genuine move, and is it likely to take center stage for the benefit of the SMEs down there to be able to access some of these loans?
I want to take my brother to the memory lanes. Before the interest capping that came into being about a few years back,
2016,
we had this enormous contracts that were being signed by people who were borrowing loans, and they never read the fine prints. Being an economist, he knows that. There's a fine print that the banker hardly wants you to read very quickly.
Yes, they take you
the
very...
bigger part, you read very quickly and say, this is a contract. You need the money. You need 10 million very, very, very quickly. And then suddenly you realize, oh, I've gotten just 10 million and the interest is about 15. But you never saw something in the fine print that if you just delay with a day, that your interest will move from 15 to 20.
Wow.
And then it moves from 20 to 30. And before you realize the 10 million that he took is now 30 million. Unfortunately, that was what was happening in this country.
All right.
Now, the interest capping, I believe, and I strongly support the parliamentarians, simply because I probably travel widely, and I know what is happening in the international community. In Germany, for example, if today you borrowed money, you pay even less what you borrowed because you're creating jobs in the economy, and there is enough resources for you to generate, to create employment, but also to be able to to produce something in a country. You understand? In the U.S., I have seen places basically some borrowers saying we only pay 1% or 2% or 3%. There is a bit of the bankers coming to realization that indeed our role here is to empower the people and not to rape from the people, from those developed countries. Now you come to the undeveloped country or developing countries where Kenya is, you find that those huge institutions in the developed countries that are paying their citizens zero interest, come here and they give money to our banks, and when they give money to other banks, it demand huge interest. And that huge interest is transferred to us. Yes. In other words, let's continue making these people poorer and poorer through their own banks. Yeah. As we borrow, as our bank borrows from them at a very little interest, they come and they hit us to pay for what we borrowed for their interest as well as those people's interest, and then in their country zero interest or 1 or 2% interest. Really, I think as a country we also have to look at ourselves and say, is it in the interest of the bank, the big guy, or it's in the interest of the small guy? I don't care how they want to say it, whether it will hurt the economy, whether our government now will borrow more locally. I don't care how they look at it, but I think what politicians and the elected leaders need to look at is how do we save the people from getting bombarded by huge interest from these big banks. These big banks already have money, and if these big banks cannot sustain it at that level of interest, then maybe they need to merge or fold and go away so that we deal with people that are able also to look at the common mwananchi. You talk about issues of CSR. And you say, oh, we make this much money, but we want to pump this much money to the community. Other than maybe KCB that is paying a lot of money in school fees, other than Equity, which other banks do you hear that is coming out there very strongly to do CSR and to give back to the community, other than lining the pockets of the directors in a huge way, money that they will never use, those individuals will never use in a million years, they still want to pocket it. I strongly believe that this is perhaps the best that our politicians are doing for us and the elected leaders. It should be capped until the banks themselves, and how many times, Linda, have the banks been pleaded with? And my brother here, I say Memo Lelen, banks have been pleaded with to at least come up with a policy to regulate themselves so that it is not open and they go back to those huge interests again. I strongly believe that this is a good decision for the country. Whether it hurts a bank or not, I strongly believe also that because of the interest cap, there was an emerging trend of small businesses, SMEs, and microfinance that have come out and mitigated. Let the big fish look for the money from the big fish, but the small person can get this money from everywhere else. But I strongly believe, so long as our banks are still greedy, we need to have this capping going on. Yes, we certainly do not want them to hurt, or maybe this move to hurt the bank, because equally it will trickle down to us. But before we get to that, you bring a lot of pertinent issues on what is being done across the borders, or developed countries for that matter, countries that have been in existence for years, 600 years or so have grown democratically, politically, economically, to a point whereby they are able to sustain these kinds of ways of borrowing. As a country, are we able to take that about turn, and would that be the ultimate solution to making the best of our economy? And if we do, then what are the dangers and the goodness of facing such a turn to a point whereby we can now start doing things the way the superpowers are doing? Because technically, we've been a country of, I don't want to say copy-paste, but we've been emulating from the goodness or the goodies that have been coming from these other sides, briefly. To answer your questions, it comes back to our governance. Yes. If we will have a democratic society where our leaders will be elected democratically without the KIMS or our server not being open because somebody is controlling it in another country, yes, in France, then we will have true leaders who have the interests of the people at heart and who make decisions in the interests of the people and not in their self-centered way. And secondly, when you have a country that has so much resources, but all you're seeing is corruption every single day, then I am telling you, the greediness of getting more and more and more is going to continue.
Yeah.
And that means we will not get to a point where basically we'll be able to sustain our financial liquidity without any problem. Right. So you have politics playing into it, and you have the big monster on the ground, which is corruption. Because I do not know why people have to be corrupt. If you know very well that the government will take care of you. For example, if we had policies in place where in the US we have what is called Social Security. If you worked hard for 50 years or 60 years, and then as you retire, the Social Security, which is, will be parallel to what we have here as NSSF, it kicks in and it takes care of you until you die. I've seen old people in America and other places, when they retire, they buy a new car. And because it's going to be problem-free, they can fuel it, they have a house, they've already paid for that house, and things like that. I think we need to look at policies that assures the people. I mean, we can fight corruption every single day, but if you've not put policies that will be able to take care of my brother here, when he's old, he wants to steal. He will want to steal so that he can protect himself during old age. And that is a problem we have. Why can't we have a policy that everybody in this country, if you're a civil servant, you really don't have to, you can do business if you want, but you really don't have to do it, because the children will be taken care of. They'll go to school. They will not have to pay for it. And then you'll also be taken care of in old age without any problem. Then why will I still?
True, exactly. All right. I would want you to echo in your sentiments on that as we wind up on that particular topic. But I think in the best interest of time, let's hit that break so that we can also give you ample time to react to it. So we'll take that short breather and we'll come back, of course, to get much more on the goodwill that is there. Because in as much as we set up the policies and people do not have goodwill to implement these policies, then they'll violate them. So if they violate them, then we go back to the drawing board. So it's important we get that goodwill from the banks. If the members of parliament are to make good what they passed yesterday, then I think it will be a great move towards ensuring that the private sector is well, of course, protected and catered for. But then again, there has to be that goodwill from the banks, goodwill from Treasury, goodwill from CBK. So yeah, still on that proposal, of course, by CBK, Treasury, and the banks to resurgent push of a lift of interest caps. And of course, that was on the second reading that was there yesterday on Banking Bill 2019. And members of Parliament thrashed that proposal in what they termed as something that was necessary to protect the common mwananchi and, of course, control the rules on ground on lending, of course, to the private sectors. And this, of course, upon that declaration in 2016 of the interest rate, or maybe the raise of the interest rates and the caps are rising to about 4% and above. So I'll come back to the guest of the day also to just echo in his last sentiments, Kefa, on this particular aspect of saying that moving forward, what passes through the House is probably something that is going to be, legally accepted or will be assented to law or will more or less be considered as the policy that is on ground. So that then means there needs to be that goodwill coming from stakeholders towards ensuring that this is a success. So when we see banks not really convinced that it's a right move to take, where does it place us? Because then we do not also want them, violate the policies that have been set or maybe the laws that have been set. Because at the end of the day, if they're in agreement to what the members of parliament say, then it's going to be an easy ride for the private sectors, the SMEs, to be able to access some of these loans. Yeah,
I think ultimately the best arbiter in the market is the forces of demand and supply. And I sometimes think that we have tried to over-legislate and trying to control the market mechanically. And eventually, it doesn't always lead us to equilibrium as soon as the market itself would have done. And my view on this is that on the one hand, the decision of the Legislative Assembly would be protecting. The interest is to protect Kenyans against exploitation. But on the other hand, they are exposing Kenyans to unfair competition with their own government and the huge borrowers. So at the end of the day, they will be able to staff, the small borrowers of capital. And this will also slow down economic activity. My view would be that we need to, explore policies that promote active participation of more players in the economy, which would actually be better, not just for the country, but also for everybody. But also, the issue of exploring derivative capital markets. You know, there's some stock of capital in this country that we don't access. And because many Kenyans are not actually taking active part because of the regulatory regime that does not allow all of us to participate. For instance, the capital markets, what is held by other financial institutions outside the banks is not actually accessible to many Kenyans, and it's idle capital. It's estimated at about close to 4 to 5 trillion Kenya shillings. And I think this is something that we need to explore so that we can have more products in the market, financial products that SMEs and small borrowers can be able to access. But ultimately, we need to open the gates to competition so that the banks can actually, that's the best way of having them have a semblance of self-regulation. Because what we are seeing at the moment is central bank playing a very key role in trying to maintain discipline among the banks. Because there is an ever-increasing appetite for supernormal profits by these financial players to the detriment of the small borrowers.
Well, interesting times ahead, and of course we can only be keen on what is playing out in the market and set up policies, like Agwenda would say, that will be good enough to control all this on all angles, because at the end of the day, it is important that we all are put to that level of equilibrium for things to move as expected.